This week I want to carry on the theme of charities. We have a large number of charities in our patch and we deal with a significant number ourselves. In particular, I want to speak about charities trading. This is a large and complex topic, and I would point you in the direction of two excellent sources of further information. While HMRC concentrates on the tax aspects of trading, SCVO paints a much broader picture. Charities trade for various reasons. It might be to raise funds, or it might be an integral part of what they do. You also have to bear in mind that you're dealing with different taxes, and so the rules for income tax and corporation tax differ from those for VAT. For direct taxes, that's income and corporation tax, trading is the provision of goods or services to your customer on a commercial basis, with a view to creating a profit. However, for VAT, you're looking at whether you're making supplies in the course or furtherance of business. So generally, if you make any supplies in return for a charge, VAT will apply. For income and corporation tax, you have to differentiate between charitable and non-charitable trading. This is important because charitable trading will usually be exempt from tax, but non-charitable will only be exempt if it's on a small scale. Now, tax-exempt charitable trading can either be primary purpose or trading mainly carried on by the beneficiaries, and you will see on your screen some examples of each type of charitable trading. So to benefit from tax exemption, the trade has got to be charitable or is ancillary to carrying on its primary charitable purpose. It can be non-charitable but very small scale, or it can be a VAT-exempt fundraising event. So what do we mean by ancillary? I thought it'd be useful to put up some examples by way of explanation. Just picking up on one of these, supposing the charity operates an art gallery or museum, then an ancillary trade might be the provision of food and drink in a cafeteria for visitors. Now, there is one area of considerable risk to charities where the trade being carried on consists of both charitable and non-charitable elements. And the risk here is that the whole trading activity could be taxable unless the non-charitable part is very small. So the test of whether a mixed charitable and non-charitable trade will qualify for tax exemption comes down to whether the non-charitable part is less than 10% of the turnover of the whole trade. The next situation to look at is where the trade is wholly non-charitable. So this will be where a charity carries on some trading activity in order to raise funds in order to finance its charitable operations. There are a number of conditions, but the principal one is a turnover test. The turnover limit here is the hire of £5,000 or 25% of the charity's total incoming resources, capped at £50,000. And you will see on the screen the relationship between the total incoming resources of the charity and the level of permitted non-charitable trading. You'll also see that the level of turnover of non-charitable trading is capped at £50,000, no matter what the incoming resources of the charity. Turning now to some specific types of income, I want to start by looking at the sale of donated goods. Provided there is no significant processing, then the sale of these items is tax-free. When it comes to VAT, the sale of anything, whether donated or bought in, will be a business activity and VAT will apply. But in general, the sale of donated goods is zero-rated. This does not apply to services. Rents received are generally exempt from income tax and corporation tax, but watch out if there are any associated services, which might include caretaking, food, laundry, etc., because these may be taxable as trading. For VAT, most rent will be exempt unless there's been an option to tax. Sponsorship can be a bit of a minefield. Acknowledging the receipts of sponsorship or a donation should not cause any problems in itself. However, care is needed where the charity provides goods or services or marketing opportunities for the donor, as this could be viewed as trading. There will be similar issues for VAT. So there are some useful exemptions for small-scale trading. But next week we will look into how charities can generate significant tax-free income to help to finance their charitable operations. I'm Alan Long from the Long Partnership, making life less taxing.